All right, so today's class I'm going to be going over um kind of like what to study and where to start. This isn't really going to be an advanced class. It's going to be one for people who don't really know what to study. Like you kind of get what I'm saying. So I'm going to be going over that stuff. Um the first thing I want to talk about, okay, like how to be successful in this field if you're serious. Okay, if you really want to make into trading, okay, you're gonna have to lose money. Okay, and I know there's gonna be 1% that don't lose money, but 99% lose money at the beginning. Okay, you have to go into the mindset of, okay, I'm gonna lose money, right? If you don't have that mindset, you're not gonna make it because you're gonna lose money. You can't be mad. So, like when I first started, okay, I really had to understand, okay, I'm gonna lose money here. Okay, this is what it is. It's completely fine. Okay. And that's really the first thing. Okay. And the other thing is, I know a lot of people don't like to, but like demo trading. Okay. I wish I demo traded longer when I started. Okay. I don't even think I demo traded at all when I started. Okay. When I started, I didn't have ICT. Um, but I wish I did because I would have demo traded. I probably wouldn't have lost so much money. And just making sure I'm consistent at demo. That would be my first or my other thing. Okay. But when I started, I literally started off with real money Weeble. Probably was not a smart idea. Really wish I demo traded for sure. Um, and the other thing is kind of discords. So like if you're in 5 different discords of signals that are signals only, how's that gonna help you? Okay. What I did was I joined a few and then I figured out which one I like best, and then I just stayed in the one I like best. Okay. I wasn't in like 10 at the same time. There was one Discord I was in. There was like signals from like 10 different people on 10 different things. I'm like, that wasn't really, I thought I was good because it's like, oh, I'm getting 10 different signals, right? It's not really because it's just going to mess with your head. Um, so that's the other thing, just making sure you're not getting like, especially if you follow like a lot of people on Twitter. Okay, like I used to follow tons of people and that would give signals. At the end of the day, there's gonna become a time where this guy who's the greatest trader ever is gonna alert a long, and this other dude who's the greatest trader ever is gonna alert a short, right? If you are relying on Twitter people to do that, okay, there's gonna come a time when that happens, right? So that's the other thing, making sure you're just kind of listening to one person, especially for learning, because they're not always gonna be right. Um, so I would say that's the other thing for now. Um, yeah, honestly, I'll play options sometimes, Q2. Um, if if I don't really think there's a good entry in futures and I just want to enter, I'll just do options. Especially for 930. If you know 930 is gonna be volatile, options can honestly help. Especially with like the futures entry that it's not gonna be as precise and there's a lot of volatility. Options might be the way to go, especially 930 when you know volatility is gonna come in. But all right, so what to study? So for you guys just starting ICT, okay, this is my homework. But for you guys starting ICT, okay, let me just pull up some things to study. Okay, the first thing I would really study is this isn't really a must, but if you don't know what indicators and whatever are, okay, that's fine. But I mean, it does help because if you know what indicators are and support and resistance and all the other retail concepts, it's gonna help you. It's gonna help you like understand why ICT works better. Okay, so I mean, it's not a necess. This is not a necessity where you need to know what these other concepts are. Okay, but maybe just give it a Google. Look at someone live trading with these concepts. See why they don't work. Okay, the one thing you should understand is the one thing you should understand is they don't work because everyone uses them. Okay, and that's what generates liquidity, right? So as long as you understand that, okay, that'll help you give conviction or get conviction around the trade. Because if you don't have conviction around a trade, well, then how are you gonna make good trades, right? ICT always says we'll do this because of this, but how do the people do that? They're doing this. They're making a trade because ICT said to, and they're like, well, I think this is going to work because ICT said it's going to work, but you don't really know why, and you don't really have a conviction in that trade. So if you understand like why the trade should work, then you're going to be less emotional during the trade, which might leading you to read longer or hold longer, right? You're going to hold the trade much longer if you know why you're in it and you kind of know what the reasoning behind it is, rather than if you're just taking it because you saw someone else do it. Okay. Okay, so that's that. All right. And based on like what should you study when you're new, what I recommend is I do have a where to start channel, but what I think the best thing is you can do is go to playlist. All you need, in my opinion, when you're just starting is just this 2022 mentorship. Okay. And then the concepts that may confuse you, what I would recommend doing is go in the core content mentorship, which are these videos. You can see core content 2, 3, 4. And you don't have to watch all of them, but if there's any concept that confuses you, there's likely a video in one of these, like for example, using breaker blocks, and it's all over breaker blocks, so you can just go watch that. Okay, but if you understand fair value gaps, you understand order blocks. Okay, let me share my screen. Like if you understand order blocks and understand breaker blocks, okay, well then, what's the point of going to these extra videos? I mean, you can still do it. If you really, really want to master everything, then go through the 2022 mentorship, which is right here. Okay. And then what I did was, I was kind of confused on order blocks. So what I did is I went to another video in this series, and I watched a video on what order blocks were, right? But I understood breaker blocks, so I didn't have to watch another breaker block video. And the other thing is you could type in what is a breaker block and you'll get other videos that aren't ICT. Just be careful of those. Some people, even me, when I started making some videos, there's some misconceptions that I've even put in some of my videos at the start, especially like the order blocks one. So I strongly recommend watching them from ICT first and then maybe trying some others. But 2022 mentorship, definitely you should watch for sure. Any concepts you don't fully understand, you want to brush up on, okay, I would go and watch the core content of, okay, not every single episode, but only on the concepts you didn't understand from the 2022 mentorship, okay? And then if you want to go even like an extra route and just watch some more stuff, I liked watching the real money interviews, because it kind of shows you these guys struggle at first and then they kind of made it out, and I kind of saw myself in them. That helped me a little bit. I really like Paladin, or not Paladins. It was the other one. I think Jade Cap. I liked his interview. But this helps psychology wise. And then the other thing is, the Market Maker. This series is not bad. Okay. But you don't really need this. All you need to be successful is basically this whole playlist right there, to be honest. And then just core content, just a few of these if you want to brush up on some. Okay, but this for sure. If you can watch this and understand the majority of it, that's definitely what you want to be doing. You can start out with core content too. I would say the core content is more. The difference between the core content and the 2022 mentorship is 2022 mentorship is a lot more complete with the concepts, but it's more disorganized. Okay, the core content is more like robotic and more mechanic, where it's like, okay, here's what an order block is, here's how to use it. But he kind of starts packing them together in his 2022 mentorship. So if you can kind of combine concepts and you're a little smarter, then watch this. But if you really want to dumb it down, you're going to want to learn everything individually, which is core content. And then you can just watch a few of these videos. In the 2022 episode 12, he talks about like intermediate term high, short term high, whatever. I don't really need that. You don't really need that to trade. It's just like a concept he talks about, and it doesn't really help you with trading, to be honest. But like, he's not gonna label it every single time. ICT too complicated. All the series are. I mean, that's literally how I got successful. So, I mean, but I also had very good grades in school, so I was able to understand what you're talking about, right? I might understand quicker than others, but again, some of the videos are complicated. Like episode 12 definitely wasn't easy to understand, right? I spent hours looping my head around what he was saying, and just to realize I didn't really need that. I mean, it's good to watch for screen time, but it's like you're not going to go into the charts looking for every short-term high, intermediate-term high, whatever. You're kind of going to note it based off of screen time. Okay, but again, I really recommend doing the 2022 mentorship over the core content. But if you like to be a little more organized, try the core content first. Whichever one you watch one of them completely, and then maybe go to the other to brush up on some concepts. I think it would be easier to do that if you started with this one, because if you watch these ones right here, you don't really know what he talks about in some of these episodes. So it'd be easier to do it if you watch this one, then watch these. Okay, versus if you did this, you don't know where he's going to talk about an order block in half these videos, So that's why I just recommend doing this. What concepts of the 20? I'll let you know. All right, so that's that. All right, so now I'm just gonna be going over the setups I see play out the most that I use from every single video. Okay, and it's pretty simple for me. So from what like something that really spoke to me, okay, which speaks to most people, the fair value gaps. But like I'll use order blocks. I won't use breaker blocks. I won't use mitigation blocks. I won't use volume balance that much. But like order blocks and fair value gaps, just those are the things I see the most easy to understand and the ones that appear a lot. Okay, because sometimes you'll get a fair value gap but not a breaker. And to me, when we get a fair value gap, it's just like, okay, here's displacement, versus we could get breaker but no displacement, and then sometimes those breakers fail. So to me, I really think fair value gaps are the best to use for any model you use. Okay, the two setups I do see most, which I already teach a lot, but are definitely inversion setups, right? These failed fair value gaps, right? When we get a bearish fair value gap here, purge some low. Okay, this is the key part, purging a low, and then breaking that fair value gap with a new fair value gap. Okay, that's the most high probability win rate setup I've seen, and it happens a lot on every single time frame. So, okay, I already teach this a lot of in my videos, okay, and why it's so good, but it's basically like the purge. And then from the eyes of a retail trader, right? Imagine a retail trader trying to short the 0.618 here, but it doesn't work, right? They're going to keep trying to short, and then it's just going to fail and squeeze them through. And that's why I like it so much, because it's like going against the grain of what most of the market's doing. So I would say this inversion setup is probably one of the best. And then after that, probably looking for order blocks. So really what I look for in my setups is, okay, low pit, right? Any sort of lower high taken out. Okay, even if it's this one, this one, this one. And all I'm watching for is there displacement above the high? Because sometimes you don't know if we're going to displace up or not if you don't see displacement, right? For example, if I see a higher here and a lower here and I'm in replay mode, right? I don't know if we're going to displace above this high. I don't know if we're going to displace below this low, okay? You just got to wait for the live reaction. Okay, and then when you see the live reaction, you just kind of wait, and then you'll see, okay, we really didn't go much below this low. We inverse the bearish fair value gap to the long side. This is bullish, right? So sometimes you don't know until it happens, and then once it happens, now you look for the entry, okay, like on this candle. But a lot of people think you need to know if we're gonna get a long setup out of this low or not. And like sometimes you don't know when we hit one of these lows. You don't know if we're gonna get that setup till we actually do, right? I'll say like on Friday, okay, the old me would have been like, oh, look for a short after we hit all these highs. But on Friday, I said in my next commentary, I literally said, don't look for a short today. It's a Friday. We have low resistance equating to the upside. Usually it means conditions for an upside day, meaning we're not going to get any shorts. But the old me would have been saying, okay, look for a short off here. Look for a short off here. Look for a short off here. Right, but do we really ever get any good short off any of these highs? Not really. So even if you do look for a short off these, okay, you're not getting any short setups, and that's what people don't understand, right? You're not getting any good displacement back down, right? All you're getting is, boom, displacement up. Never go back down. We never get a 2292 model. Right here, back up. We never get a 2022 model. Okay, you can see we kind of hold this fair value gap, which I'm assuming is a higher time frame fair value gap, which is telling you this the order flow is still bullish, right? And we never really get that solid short setup, okay? And it's the old me. It's something I probably wouldn't have gotten burned on because I would have been like, oh, we'll wait to see the reaction of this high if we like break the next fair value gap or not. And when I see us holding every fair value gap of breaking every high, do you really think I want to short? Definitely not, right? So in live time, do I really know if we're gonna go above these highs and how much we're gonna go above these highs? Not really. I just like to see in live time. In live time, that's when it tells me, okay? Some people I think have a magical ball, and I know, but I really don't know. There are days where I'll be like, okay, look for a short at this high, but we'll keep going higher. Okay, what's so good about that? Well, even though I say look for a short, we just don't get a short sometimes, okay? And the people who do try to take a short when I say look for a short, they don't have proper framework, okay? They don't know how to create framework because just because I or ICT says this is buy side, you look for a short after, you still need proper framework to take that short, and not a lot of people have that, okay? People just expect, oh, we hit buy side, we're definitely going to get a short, okay? So that's the other thing that is important to understand, okay? You don't really know in live time until you see the setup whether these highs and lows are going to be displaced to, okay? And that's what I kind of watch for, especially like open. If where you go to open, I'll just wait till open purges one side and then I'll look for the opposite side, okay? It's not that hard. And sometimes open will purge one side, but it keeps going lower and we just don't get the opposite setup. Okay, I'll just keep watching. It is what it is. I'm not going to short if we take a low at open because that's just dumb. Unless I see really obvious like equal lows below, but generally I don't do that. Okay, and then the other obvious setup I see play out a lot is just I would say these kind of order block setups after we hit liquidity. So you can see these whenever these order blocks. So whenever we take out a major low, okay, and we get these down candles, it's kind of like another down move. So see how we take out this low right here and then we retrace, then take out this low again. It's like a double retracement. Whenever I see this formed with a candle with an order block, which this is an order block, okay, you're gonna have to learn about that if you don't know what that is, right? Whenever I see something like this where we kind of get a double sweep here and then a red candle or a series of red candles before a nice move up, right? This shows this train just dated delivery. Whenever this right here is lined up with some sort of fair value gap, I find that to be the other really high probability setup that plays a lot. So purging a low, getting an order block that kind of matches up with a fair value gap. This is the other strong PD array that is not an inversion that also works a lot. Okay, so this will speak to some people, and my inversion setup will speak to some people. Okay, I prefer the inversion setup. That's what I'm just used to. But this OB plus fair value gap is pretty solid setup, and it's not a unicorn, but it's very solid. And what you can do is, let's say this setup doesn't speak to you. Let's say the inversion setup speaks to you. Well, just look for an inversion setup off of an OB plus fair value gap. So if this yellow zone is an inverse, or if this yellow zone is an order block plus a fair value gap, look for an inversion setup off of this and then long, right? You don't need the bottom tick everything. Okay. So that's the other thing you can do. If one doesn't really appeal to you, just wait and go to lower time frame until that one that does appear to you appears, right? There's a lot of words to swallow, but hopefully you get what I'm saying. So it's like a setup off of this setup that you don't know if this setup's gonna work, but then you see your setup off of this setup, and then you long again, right? It's inverse for every gap, cool too. Okay, but the one thing I look for in every setup that I do take, okay, no matter where we are in the market, is some sort of lower high to be swept. Okay, that's the one thing. If you're not seeing a lower high swept, setups are hit or miss. There's going to be people on Twitter who be like, oh, this is an amazing setup, and they'll post a recording and whatever, and it'll be a really good play. But if there's no SMT or there's no low swept, I don't even like their video because to me, that's not a really good play, right? I want to see a really solid play with a low swept that just makes the most sense to me. So like when going through a checklist of, okay, here's what setups I'm going to take, always make sure a lower high has been purged. Okay, whether it be London low, previous day low, previous day high, whatever. Okay, it's just, it makes the play so much better. Yeah, so it is, but I'm using this. This is an order block plus for every gap too. Okay, it's a lot of things. So this is an inversion as well. You guys didn't realize, but it's also an order block with a fair value gap. So again, there's like 5 different confluences here, and that's what I mean by when you're learning ICT, you're gonna see some of these things line up perfectly. Okay, like there could be a 1-minute breaker here as well. I'm not gonna go on the 1-minute time frame, but find one model, and if once you find that model, it should line up with other models. Okay, so if like I know low's been swept and I see an order block plus for a reality gap, if that's my model, it probably lines up with a bunch of other models that people use, okay, on the other time frames, right? Maybe not the time frame I'm on now, but on the other time frames, it probably lines up, right? And that's also important to understand. And yes, the 2022 mentorship is more than enough to be profitable. Okay, but profitability does not come without discipline. You must be disciplined to be profitable. Okay, that's the one step people have got to understand. Okay, so there's that. Okay, figuring out like targets for stuff. Okay, this was also another struggle for me at the beginning. I saw a lot of these traders on Twitter. They'll take these plays and they'll be like, "Oh, target the next high," right? Which is right here. Okay, but I learned these are low win rate plays. And then other people are like, "Oh, target 2-to-1." I'm like, "Okay, that makes sense. 2-to-1 would be right here." But these 2-to-1 targets, let's say I take it like right here, and this is 2-to-1. You're targeting just a random ass spot in this very value gap, which also doesn't make sense. So this doesn't make sense, and this is just lower win rate. So over time, what I figured out was it doesn't matter what target you choose. The one target that will always basically hit is this internal liquidity, and it's just all this is the recent swing high formed before the setup was made. So like this is the high that formed before like a long setup was made. Okay, you can see this is the long setup right here, and then that internal high hits. And then once we hit this internal high, that's where it comes down to higher time frame bias, a lot of other things, and that's where newer traders tend to struggle because they don't know if we're gonna hit here or not. Okay, once you're more seasoned, you can definitely get away with, okay, I'm gonna long here and I'll sell half here and then I'll try to hold the rest of here. But if you don't know where we're going and your bias is just bad, okay, when I started, I learned to just target these internal highs and lows, and I still do a lot, and I'll still leave runner sometimes. But I mean, these are the most guaranteed targets ever. Just these internal lows and highs, and I know they don't look flashy, but if your bias is wrong, these will still likely hit, and then we'll go down. Okay, so we'll do something like this, right? That's why they're so good. That's why when you're more seasoned, yes, you can start targeting these higher areas, but you really, really need to be right at least 70% of the time about higher time frame bias, or else we're never going to hit, meaning there's no point in ever taking them, you know? So that's one thing. Also, like another strategy people like to use, silver bullet. Again, I don't like silver bullet because all that is a 2022. It's like just a fair value gap model, right? It's just a fair value gap, and without the context of liquidity, how do you know if silver bullet's gonna work, right? People literally say, "Oh, it's 10 o'clock. The first fair value gap you see is gonna work," right? Which, if we go to 10 o'clock here, okay. Technically, the first fair value gap we get is, I'll say, right here, right? And people are gonna take the silver bullet, be like, "Oh, we're going up, long, long, long," and they'll take the silver bullet and they're like, "Oh, I'm taking the silver bullet. It worked. Let's go." But they don't understand why. Like, you still need to understand context of the trade for the silver bullet to actually work, right? How do you know the silver bullet wasn't short of the bearish fair value gap, right? It's still all market context. So when someone says they took the silver bullet and it works, right? Do they really know the liquidity? Half the people don't. Okay, they don't know the bias, right? They don't know where liquidity is. They just take the silver bullet because that's what ICT says. So that's the other thing. Like, if you are using the silver bullet, you really want to make sure you know where the market's generally going to go to, right? Knowing the draw on liquidity. That's another thing. But again, going back to like the targets thing, okay? When you're newer, don't have all these home run targets if your bias isn't really that good because they're never going to hit. And you're just going to waste so much potential. Go for these smaller base hits first, and then gradually over time, once you understand the higher time frame bias, you can start holding 50, 75% of your position. I would still scale always at these internal highs or whatever, but as you kind of get over and go over in time and you just get better, maybe start holding more of your position for these higher risk rewards. Okay, but if you find these higher targets here are not hitting more than 50% of the time, then stop doing that because there's no point, right? You're just going to get stopped out every time. You're going to get discouraged. It's not going to help you. And again, targets, don't target random places. Okay, you need to target. Some people target fair value gaps, which is fine, but highs and lows is all I need, right? When I started trading on SPY options, I'd sell a call because I was up 20%, but I just sold because I was up 20%. Meanwhile, we were really close to a daily high, and if I knew that, I could have made 30%, right? And that's the one thing. You got to understand the market will always go for these highs or lows, right? It's not just going to stop in the middle of nowhere generally and go down, okay, unless there's like another off, like, scenario off the chart that's not going to happen, right? But like, typically you really, really want to hold to these like highs and lows, right? You don't want to be selling just because you're up 10 points, okay? Unless it's like if you're doing Cameron's model, that's the only time you're selling because it's 10 points, like Cameron's model. But it all depends on your model. Most models you target high or low. Okay, that's what you want to do. You don't want to sell short. You don't want to hold past it. Just sell at the high or low. It's pretty simple. And yeah, just the target thing. Make sure you're not setting random ass risk rewards. Just because this is 2-to-1 doesn't mean you hold to right here, because this really isn't a target, right? This is just a spot in price versus this is an actual target because this is an actual high, right? Where the market actually has to go to, right? If the market doesn't have to stop here, why do you target here? I mean, yes, it's a 3-hour trade, but you're going to hurt yourself if you try to go for a 3-hour trade every time because half of them are going to hit and half of them aren't. Meanwhile, half of them are probably hit liquidity and half of them probably have it, and you don't understand that. So it's just make sure you're targeting these old highs and lows, to be honest. And I think that's basically the rundown of what I had planned for this class. Again, pretty basic. So does anyone who is newer kind of have any questions on what I just talked about? I assume there's some. Does the market structure say shifts fake? I would say yes and no. I mean, all a market structure is stops being ran. So I would say more yes, it is fake, because if you really think about what a market structure shift is, the algorithms do not see this as a market structure shift. The algorithms see this as we take out a ton of stop losses with a ton of displacement So all these stop losses, people getting stopped, they're all going to reverse their position and go long. And that's what the market structure shift really is. And it's all based off a stop. So I would say it is kind of safe, or it is kind of fake, just because, I mean, but that's how we see it. Yeah, market structure shift is more important for beginners. I never use market structure shift anymore, because if you think about in terms of liquidity, you don't need market structure shifts. Yeah, live market entry of like my bearish entry for sure. Right here is a good one. Wait, never mind. Also, not trading Asia session. When you start trading, make sure you're just trading London and New York. If you trade outside those hours, you're probably going to lose more, and you're going to be like, oh, why is this failing? Okay, it's because of time. Just make sure you're not trading during those stupid times with no volume. Trying to find a short inverse entry real quick. I would say this is a good formation, like this one right here. So this one, although it doesn't really give you an entry, okay, when you see like this is 948, 948, 949, 954. When you see us pump to that 10 o'clock time and then start violating a bunch of bullish fair value gaps, that's like my favorite formation, the short to my short side. And this one doesn't really give a good entry because it doesn't pull back, but this formation in general is one that I see a lot, okay? Especially at the right time, like 10 o'clock, even to the upside. We'll continue that way. The key thing is violating these fair value gaps. And this one I probably wouldn't even enter because it doesn't give me the entry, but if we were traced here, I probably would. But you can just see in this scenario, right? There's an order block here. Okay, order block here, fair value gap here, and they just both get violated immediately, right? So what does that tell you? That tells you we're going to go to the next liquidity pool, which is down here, right? Imagine if this is on the weekly time frame. This candle's on the weekly time frame. This would be like a 300-point move right here. So it's just good to remember this formation just in case it happens. Again, really just a bunch of fair value gaps getting violated, right? And you know, okay, now these are all violated. The next liquidity pool has to hit, okay? And that's just something you want to remember, right? PDRA is violated. Next liquidity pool should hit. Okay, what I exactly just said. Okay. So that's an example to the downside, although this one doesn't really give you good entry. This one is good. So this one kind of does. Not really actually, but you can see like just this formation right here. It just shows you we're going to continue to the next liquidity pool, especially when that last fair value gap is broken, which is the last fair value gap that wasn't filled. It really shows you we're going to continue down to the next liquidity pool. Also, like looking for equal highs and equal lows that are perfect in NQ. Those generate setup after setup after setup, and they almost never fail. Okay, so make sure you're looking out for those like perfect equal lows on. These aren't perfect right here, but they're kind of three of them. They match up. Look out for these because the market will go back and target all these so much. I literally just do it the same way, right? Imagine if, yeah, I always use market maker buy and sell models. Like this is a clear sell model right here. I always imagine the higher time frame like if it was a lower time frame, right? This still applies to the higher time frame. This still applies to the weekly chart. This still applies to the daily chart. If I saw this in the daily, I'm bearish. Okay, and we did see that in the daily. Okay, if I go to the daily right here, right, we saw that in the daily a few weeks ago. We violated this really nice bullish fair value gap. And what do you see? We know, okay, now we're going to go to the next liquidity pool because this was closed below. And it still gives us 300-point move, 400 points. So Again, no matter if this is on the 1 minute or the daily, it's the same thing. I will say DR is useful with ICT if you're Kit or if you're ICT concepts from Twitter. But I tried it out. I did not like it. It just depends on the person. I think ICT alone is completely fine. DR just complicates it. But hey, if you're smart and you want to go that route, be my guest. I know ICT concepts is pretty successful with it, so really can't talk bad about it. He's not talking about the course Twan. He's talking about like market maker buy models and sell models, I think. And yeah, change of character is the same as market structure shift. A lot of people in Forex use change of character. All right, is that it for now? One more question, then I gotta head off. Oh, the BPR thing. The only time I'll ever have super high confidence in a BPR setup is if we sweep below. Like, if we don't sweep below, they're hit or miss. So like right here, when I see this after sweeping a major low, I know we're just gonna keep skyrocketing up with no retracement. Right? There was like a weekly low here, which I don't know exactly where it was, but let's say it was right here. And when I see this formation, I just know we're gonna keep going up. Versus if the low's down here, this is a hit or miss play to me, to be honest. I mean, yeah, it'll work, and you'll have FOMO off of these because they'll work sometimes, but definitely need to hit a low first for something like this to be like 100% win rate play, or just a 95% win rate play. Because if we take the low and form of BPR as quick as we do there, like that's just, I know we're gonna keep going that way. When do I go live in Discord every single day for my premium members, and then sometimes I do free lives. Cool too. I already answered that question. I use it the same way. I just imagine these 1 minute setups like they're on the higher time frame, right? Imagine if this 1 minute long was on the daily chart. It's the same exact thing, just a lot more points. They still work the same. People think just because you're on the higher time frame, price is going to be different, but it's not, and that's where people go wrong. They'd be like, "Oh, the daily time frame did this, so this is going to happen." And then 5 minutes later, they'll be in the 1 minute. They'll see the 1 minute do the same thing and think a different outcome's going to happen. Like, at the same price on different time frames, the same thing should happen. You know? Do I take any plays when it comes to fair value gap targets like 1 hour or 4 hour being used as support or resistance in higher time frame? Yeah, sometimes like right now, I'm targeting this fair value gap because I want to see what happens. I mean, well, no, I'm not because we hit it. But like Friday, I started targeting this because I want to see what happened when we get into it. Right? I don't know if this is gonna be used as a resistance. So I'll take the benefit of the doubt and say, okay, this will be used as resistance initially, and I will just target this instead of a high, if that's what you mean. But typically I just target highs. But if this is 50 points from blocking us hitting a high, then I'll just target this. So if this was almost non-existent or just tiny, I'd expect us to probably blow right through it, to be honest, and just hit this high. But I think it depends on where we deliver from. If we're delivering from really low and we get a giant green candle and that giant green candle closes here, then I'll expect it to use as resistance. But if we consolidate and we consolidate, and then we start getting a big move at the start of this fair value gap, I'm not going to expect this to use as resistance because we still got a lot more room in the lower time frame. Versus when you get a candle like this and we hit this 4 hour fair gap, we've like, why would we keep going up and blow right through this, especially after like a 300-point move here, right? It just doesn't make sense. So I would expect it to be used as resistance depending on how big the candle previously was or how big the move was before. All right, that is it for now. I'll see you guys all later. This will be recorded and uploaded to YouTube in a little bit. So I'll be live again for premium guys. Okay. And peace.